There's a moment in the market that almost every investor experiences. Quiet moment, right before they click buy. Chart has been rising for days, sometimes weeks. Every candle looks like confirmation. Every headline sounds like validation, and inside your mind, a voice begins to whisper, maybe this time is different. At first it feels like logic. But if you slow down, if you really pay attention, you'll realize something else is happening. It's not logic, it's pressure. Because just days before that moment, you were cautious, you were skeptical. You saw the same asset at a lower price, and you didn't move. You told yourself, it's too risky. I'll wait for confirmation. I don't want to lose money. And that felt reasonable. It felt smart. But now, something has changed. The price is higher. The risk objectively is greater. And yet, you feel more comfortable buying. That contradiction is where the story begins. Because the market didn't change. You would have revealed there is a pattern that plays out quietly in the background of every market cycle. It doesn't appear on charts. You won't find it in indicators, but it drives almost every decision people make. It's the cycle of emotion. It begins with uncertainty at the bottom of the market. Things feel unclear. Prices are low, but confidence is lower. There's doubt. Everywhere news is negative. Voices are quiet, and most people stay away. This is where opportunity lives. But it doesn't feel like opportunity. It feels like danger, so people wait then. Slowly, the market begins to move. Not dramatically at first, just enough to shift attention. Prices rise a little, then a little more. Then something changes. People start talking again. Confidence returns, but not all at once. It grows slowly. And then suddenly, and this is where the emotional shift begins. You start noticing it more. You check the price more often. You begin to imagine what could happen. What if it keeps going? What if I miss it? These thoughts don't feel like fear. They feel like urgency. And urgency is powerful. It creates movement, but not always the right kind, because urgency doesn't ask questions. It doesn't evaluate risk. It doesn't consider long-term consequences. It just pushes you forward. And so you watch the market rise and rise and rise until eventually something inside you snaps. Not in a dramatic way, but quietly, subtly. You stop observing and you start participating. You buy. And in that moment, everything feels right. There's relief, excitement, even a sense of pride. You made the decision. You took action. You're finally part of the move. But the market doesn't reward emotion. It reflects it soon after you enter. The momentum slows at first. It's barely noticeable. The price pauses. Then it moves sideways, and you tell yourself, this is normal. Then it dips. Just slightly. You stay calm. You've seen this before. Then it dips again. This time a little more, and something inside you begins to shift. Not your strategy, your motion. You start watching more closely, checking more frequently, thinking more intensely. What if this is the top? Should I sell? Maybe I should wait. And now, the same mind that pushed you to buy is pulling you in the opposite direction. This is the part most people misunderstand. I think the problem is timing, but it's not. The real problem is reaction. Because nothing about the market is personal. It doesn't know you. It doesn't care about your entry. It doesn't adjust for your emotions. But your decisions? They are deeply personal, and they are shaped by patterns you may not even see. When the price keeps falling, you begin to feel something heavier. Not just fear, regret. Regret is different. Fear looks forward. Regret looks backward. You think about the moment you bought. You replay it. You question it. Why did I do that? I knew it was risky. I should have waited. And in that moment, clarity appears. but it comes too late. This is the lesson the market teaches, not through explanation, but through experience. It shows you the gap between what you know and what you do, because most people already understand the basics. Buy low, sell high. Be patient. Think long term. These ideas are simple, but they are not easy, because when emotion enters the picture, clarity disappears. And this is where crypto karma begins, not as something mystical, but as something behavioral. Your actions create patterns. Your patterns create outcomes, and those outcomes reinforce your behavior. If you buy out of fear of missing out, you will likely enter too late. If you sell out of panic, you will likely exit too early. And then, when the market rises again, you'll hesitate, because now you're carrying memory, experience, pain, and so the cycle repeats. You wait when you should act. You act when you should wait. Not because you don't understand the market, but because you haven't yet understood yourself. This is the turning point. At some point, after enough cycles, something changes, not in the market, in you. You begin to notice your reactions, not after the fact, but in real time. You feel the urge to chase, and instead of acting, you pause just for a moment, and in that pause, something powerful happens. You create space between feeling and action, and in that space, you gain awareness. You begin to ask different questions. Not what is the price doing, but what am I feeling right now? That question changes everything, because now you're no longer controlled by the market. You're observing your relationship with it. You start to see patterns. You notice that excitement often appears near the top. You notice that fear often appears near the bottom, and slowly, you begin to detach. Not emotionally cold, but emotionally aware. You understand that your feelings are signals, not instructions. And this is where discipline begins, not as force, but as understanding. You don't need to fight your emotions, you just need to recognize them. Because once you see them clearly, they lose their power over you. You no longer feel the need to act. Immediately, you no longer chase every movement. You no longer react to every drop. You begin to think differently. You zoom out. You stop focusing on moments and start focusing on time. Instead of asking what will happen today, you ask what will matter in 5 years. This shift is subtle, but it changes everything, because the market is built on short-term emotion. But long-term patience? Most people operate in the first. Very few succeed in the second. And those who do aren't necessarily smarter. They are simply calmer. They understand that opportunity often feels uncomfortable, and that comfort often comes at a cost. They know that when everyone is excited, risk is already high. And when everyone is afraid, opportunity is often near. But more importantly, they understand themselves. They know their tendencies, their triggers, their weaknesses, and they build systems around them, not to predict the market, but to protect themselves. Because in the end, the biggest risk in investing is not volatility, it's behavior. The market will always move up, down, sideways. But your response to it, that's what defines your outcome. And once you understand that, the cycle begins to break. You no longer see a rising market as an invitation. You see it as a test. You no longer see a falling market as a threat. You see it as information, and slowly, you stop repeating the same mistakes. Not because you're trying harder, but because you're seeing clearer. And one day, you'll find yourself in that same moment again. The market is rising, people are talking, the excitement is back, and that familiar voice returns. What if you miss it? But this time, you recognize it. You've heard it before. And instead of reacting, you pause, you breathe, and you choose. Not based on emotion, but on understanding. And in that moment, you've changed the outcome. Not just of a trade, but but of a pattern, and that is what crypto karma really is. Not luck, not timing, but the result of your own behavior. Playing out over time, the market doesn't punish you, it reflects you. So the real question is not, where is the market going? The real question is, when it moves, who will you be? Because the answer to that question will determine everything, if this made you think differently. Stay with this channel, because the most important lessons in crypto are not about the market, they're about you.